All right, welcome back to another episode of the VENDO podcast. I am super excited to have with us all the way across the pond, Leonardo Felisberto, and I'm sure I butchered your last name.
That was perfect.
Felisberto or Felisberto?
Felisberto. So it's actually Portuguese origin. Yeah.
Portuguese, great country, by the way. I love Portugal. I've been there. So super excited to talk to you today. Leonardo is the global head of partnerships at SellersFunding. Very appropriate time for us to have Leonardo on to talk about this as companies are figuring out struggles with supply chain, getting goods, paying for those goods, funding their businesses, funding growth. So super excited to dive in here. As I like to start with, Leonardo, please introduce yourself to our audience. Tell them about yourself.
Yeah, would love to. First and foremost, thanks for having me on, Darren. Really appreciate it. Long-time listener, first-time speaker. So really happy to be on here with you guys. Appreciate it. So a little bit about myself, just personally, so you guys get to know me a little bit more. Actually, originally from Brazil. My family moved to the U.S. when I was 10. Therefore, I don't have the fancy Brazilian accent. I sound like a gringo. But and so my background growing up in the U.S. Went to uni, studied econ and corporate fi, and ended up in 2008 joining Wall Street right out of school, which was a heck of a time to enter the financial markets. For those of you that may be too young or were in diapers at the time, that was the start of the financial crisis in the US and globally. So I definitely think I've earned my stripes, just kind of, diving into that. And then shortly thereafter, I actually moved to Switzerland, and I was doing banking there, so covering Latin American markets. Spent about 2-3 years there. Really good experience. I mean, there's so much history and legacy right around banking in Switzerland specifically. And then moved back to the U.S., New York, where I was covering mostly institutional clients, basically advising them across their balance sheet. So on the asset side of things, so advising them on their investments, and then on the liability side, helping them with different credit solutions for their businesses, transactions, acquisitions, things like that. And then fast forward to 2018, my wife and I moved to London, where we are now. And shortly thereafter, the CEO of SellersFunding, who I had known from my previous work at JP Morgan, called me up, told me about this company that he had just started about 2 years prior, that was taken off in the US, and he was looking to expand it into Europe, starting with the UK, and kind of sold me on the dream and asked me if I wanted to hop on for a ride, and I did. So basically for the past 2 years, what I've been doing is focusing on building the business here in the UK and by extension across continental Europe, from the ground up, essentially. And it's obviously a few bumps in the road with the unexpected pandemic, but as we all know, has served as a huge tailwind in our space. But yeah, that's just a little bit about me, and still in London, and now kind of dual hatted, as I think most of us are, in startups or in bootstrapping our own businesses, so to speak. So I still oversee our UK European business, but in conjunction with that, I also head up partnerships for SellersFunding globally.
That's awesome. Thank you for the background. I thought you were going to say dual hat, dual remote father at the same time as I'm working, as we talked about before the podcast. Like,
there's a lot of hats. Yeah,
there's a lot of hats.
That's the main hat for sure.
Exactly.
One I'm proudest of.
For sure. So I appreciate the background, where you came from, how you got to SellersFunding. I think this is a unique topic for us. It's not something we typically cover on our episodes, but it's important because it affects a lot of things: supply chain, funding growth, funding inventory, like all the different things that you need to run your business. Knowing your numbers, right, is part of this being important. With the increase in FBA fees and so many things happening, it'd be great to get your take and thought on just the overall marketplace landscape: Walmart.com, Amazon International, Shopify, and the supply chains that are affecting those marketplaces, and how a company like SellersFunding kind of plays into that in a big way.
Yeah, no, absolutely. Happy to walk through that. And I'll take it in pieces. So first, I guess, starting with the supply chain issues, right, which is such a hot topic nowadays. I think it's top of mind, to everyone. Our perspective and what we've seen, our experience is that we think that it's here to stay, at least for the foreseeable future. The kind of uncertainty around it, right? However, we also think that it's going to drive systemic change in the space as well, right? So what I mean by that is I think we're going to see change, whether it be via policy, right? So I don't know if you had seen, Darren, but this was probably a month or so back now, with the CEO of Flexport, effectively with a tweet that he had sent out. He changed policy in California, in Long Beach, specifically due to the bottleneck that was going on with the port over there, and a couple of ideas that he had just kind of sent out. It reached enough people for them to make a change around that. So I think you're going to see a lot more in the way of kind of regulatory and policy change as it relates to supply chain. And then the other side too is innovation, right? As with everything else, I think you're going to see a lot more digitalization in processes, especially in something as archaic as just supply chain, right? So I think that that's going to drive some significant change in the space. And I'm not saying that that's going to happen overnight, but I think that's kind of what's going on in the background. It would be our opinion. Then lastly, regional shifts. And I think we're already starting to see a little bit of that, especially just via our network. Like I said, my background, I'm originally from Brazil. So is our CEO and our co-founder, both Ricardo and Fabio. So, very strong ties to Latin America. And, I think you're already starting to see a lot of sellers and businesses look for other places to source their goods, right? And, Brazil and Mexico are two that come to mind that, make a lot of sense from a geographical standpoint, right? As it relates to North America, specifically the US. And also from a cost standpoint too. So very favorable currency, as it relates to the US. So I think those are some of the changes that I think we're going to start to see over the next year or so as it relates to the supply chain.
I'm just curious on that supply chain. Sorry to cut you off.
No,
just sticking with that real quick. We're so focused here in the US on the US. We pretty much have tunnel vision when it comes to everything else going on in the world sometimes. I haven't followed much in the UK, or excuse me, whether it's UK or Europe. Are there similar supply chain clogs or issues? I know the Long Beach port, I mean, it's literally down up the street from us here. We've seen the ships sitting off the coast, but I'm curious, how is it affecting, or is it affecting any other international markets?
Oh, it absolutely is. We're seeing a lot of that, and we're hearing it directly from our clients here in the UK. So obviously the Suez Canal, right? That whole disrupted over the summer was disrupted. A lot of goods kind of reaching the UK specifically, and the rest of continental Europe. But beyond that, what we're dealing with over here too is a good old Brexit still, right? So there's a lot of that's still is yet to be sorted. So that's where I think a lot of the issues kind of end up coming about.
Got it. No, thank you. That's very helpful. Just switching topics to kind of the growth and how seller funding plays into it, and the different types of funding that are available. Maybe if you want to educate our audience a little bit on some of those things.
Yeah, no, happy to walk through that. So maybe just kind of taking a 20,000 foot view, right, of the space in general, because I think that for a lot of sellers, the biggest thing, we'll try to make this as interesting as possible. Finance tends to be a very, very dry topic, right?
Hey, I think it's a sexy topic.
I'm right there
money.
with
We're
you.
talking about money.
That's exactly right. It's the most important. It's as personal as you can get, right, for most people. And
let's be clear, a lot of people aren't selling products on Amazon or Walmart for some altruistic purpose. The majority of the sellers are selling to make money. So we're here to educate them how to maximize their growth, their return. So I promise you, everything you're putting out here is very valuable to our audience.
Absolutely. No, that's great to hear. And it is such a critical component of any business, right? I would even go as far as saying that, cash flow is the lifeblood of a successful business, right? Of a business that is thriving. So with that, I think education is a huge component, right? In this space when it comes to finance, because you're right, there's so many options out there, right? And we kind of talked about this earlier, from your traditional revolving credit lines to term loans. So just to explain a little bit more on those. So term loan is typically going to be 12 months, right, in maturity, and it's quoted at a stated APR. So an annual percentage rate, right, where you receive a lump sum and it gets amortized kind of like a mortgage does, right? And similar works with a revolving credit line or a credit limit where you're approved for a max amount. You draw down as you need it. And then obviously as you pay that balance down, it's dynamic in nature where it kind of tops back up your available balance, right?
Yeah,
so
like a large credit card in a sense.
That's exactly right. So that's kind of the revolving nature of it. And then I think what's been most common in the e-com space specifically is revenue-based financing, right? And it takes a couple of different forms. Merchant cash advance actually is, a type of revenue-based financing. It's the percentage of your sales that's collected until you pay back the amount that you've withdrawn, let's say, plus interest, right? Merchant cash advance specifically is done via your payment processor, right? So it's a percentage they collect of your credit or debit card sales. So that's kind of just the landscape. The way that we position ourselves in the market is as a growth partner, right, for sellers. So we specialize and focus only on e-commerce. So we think we understand pretty well what the challenges and pain points are of sellers. And we've essentially built out our platform and our solutions with that in mind, right? So specifically to address the challenges and pain points of e-commerce businesses. So just to give you an example, all of our credit solutions have some sort of grace period or interest only period, right? And that's more important than ever. Again, going back to the supply chain issues we were talking about, because that gives them a runway before they have to start paying back that loan, right? So the interest only period, we go up to 120 days. And then we offer a grace period whereby they're not paying anything for up to the first 60 days, right? And you think about how long, especially nowadays, it's taking for you to put in, a purchase order before that product is actually in the virtual shelves and you're receiving proceeds from it. It's going to take you anywhere from 3-4 months plus, right? So having that runway to give your cash flow some room to breathe is very important, we feel, for clients. And then another feature that we have kind of with this in mind as well is no prepayment penalty. So our revolving credit limit, we allow clients to pay back without incurring any additional fees ahead of kind of the end term or the maturity date of the loan.
That so super helpful to understand kind of some of your terms and some of the financial terminology we'll dive into here. Here's some good insights. I think I'll combine a couple of questions into one for our audience. In your opinion and your experience, what do you think are some signs that a business needs that funding to either survive or grow? And then how do you determine which type of funding is best for either or any other scenario?
Yeah, no, those are, I think, the questions that we lead with. And to answer that, I pose a question back to our merchants, which is the why. I think that's the most important component that they need to answer. So why do they need funding, right? And so if it's to invest, let's say, in a product that has a proven ROI, right? Be it to use those funds to purchase more inventory or to increase ad spend, or maybe it's to develop a new product line for a business that's already established and successful, or expand into a new region. Those are all reasons that we look at as you incurring good debt, right? It makes sense for the business. What you're doing is you're benefiting from the cash flow in order to maximize or accelerate a proven or determined ROI, right? On the other hand, there are some folks that look for funding in order to, quote unquote, save their business, right? And that's what we consider to be bad debt. So this is a business that doesn't have a proven product. It's a product that is not selling or has very low demand, or maybe the issue is with management or operational, right? So if they're looking for funding to just keep the lights on, so to speak, there are other issues at play. We say that should be addressed first before thinking about cash flow and incurring debt for a business that in the long run may not be in a position to sustain that debt, right?
So that speaks to knowing your numbers, right?
That's
And profit.
that's exactly right. And it's imperative that all sellers know the numbers top to bottom of their business, right? Because at the end of the day, when you kind of just break it down, profits, you're only going to be able to increase one of two ways, right? Either increasing sales, top line, or reducing costs, right? And then, so I think if you know each and every line item of your business, you're in a better position to kind of manage and tweak and optimize. If you have a sound understanding of what your numbers are. And then in terms of the second part of your question, which is how you determine what type of funding option is best for you. I think that the two main factors that we look at and I think are of critical importance are timing and amount, right? So what I mean by that is I think sellers should match the timing of the funding that they need with what that money is being spent on, right? So let's say that you need funding for an upcoming inventory purchase, right? And you know that inventory that you're going to buy has a specific ROI, right? It has an ROI of X. So what you want to ensure is that you match the timing of that ROI with the cost of funding for that same period, right? It doesn't make sense for you to take out a loan that's 1 year in maturity when the ROI on that spend is going to be over a 6-month period, right? Because then you're not comparing apples to oranges. And that also ties in with the pricing, right? So making sure that the ROI on that specific investment that's being made via the funds that you're borrowing is higher than the cost of that capital, right? So that's, I think, two of the main components is timing and amount, making sure that the amount specifically is the amount that ties with the investment that you're making. Because a lot of times what we see, and because clients come to us and say, oh, XYZ offered us more, right? But if you don't need that cash flow, if that cash is just going to be sitting idle, right, in an account, there's a cost to that cash, right? So you need to make sure, and again, it goes back to knowing your numbers, right? That you're using those funds with intent, right, for purpose, rather than just because you have X amount available, you're going to take that all down, but there's money that's being spent as a result of that.
I feel like I'm back in finance 101 here a little bit. The time matching principle, right?
That's
to
exactly
money,
right.
all those things. No, I mean, again, these are fundamentals that sometimes you lose sight of as you're operating your business, and you want to focus more on the sexier stuff of advertising or optimization, and you just forget, hey, wait, there's a whole foundation in place here that needs to be paid attention to. So let's dive into seller funding itself. As we know, it's a very competitive space. There are some other, as our audience might be more familiar with, a Payability, a Payoneer, because they partnered with large retailers, et cetera, or Cabbage. But I'd love to hear, because I was impressed with Seller Funding's platform and some of the additional tools and resources that are actually available to help sellers, even at no cost to some degree. It would be great for you to speak to that as benefits for our audience too, and what makes it different.
Yeah, no, happy to. Thanks, Darren. So I'd say there are two big differentiators for Sellers Funding when you kind of take a look at our peers, right, in the space that we operate in. I think first is the breadth of our platform, whereas other folks in the space focus on one specific service or product, right, whether it be global payments or foreign exchange or working capital. We combine all of that under one roof, right? So that does two things. I think it streamlines processes for businesses, so they don't have to waste time looking at different providers and transferring funds between different providers, or whatever the case may be. It's a lot easier for them to manage if it's all housed under one platform. And then two, as a result of that too, there's kind of economies of scale. There's a bundling opportunity where it's more cost effective for businesses, right? So an example of that is we're able to offer international payouts, advanced international payouts for clients. So if a client is based in the US, selling in the UK, we combine the receivable account in GBP with daily payouts, so they don't have to wait for the 2 weeks for the marketplace to pay out. So on a daily basis, they're receiving US dollar, their home currency, for a product that's being sold in the UK. Same would apply to Europe, or vice versa if you're based in Europe selling in the US, right? So that's kind of one benefit of the offering. And then the second component of that, I think diving a little deeper into the working capital, is what we had mentioned earlier, is the flexibility around our offerings. And then lastly, as you had said, kind of moving away from the paid products specifically, is our Seller Signals platform. And I think that's been a huge differentiator for us, because I think the way that we're also trying to position ourselves in the market is to take a more holistic approach and be more of an advice-led partner to our clients versus just a transactional service provider to our clients. And I think a big component of that is providing as much insight as possible to our clients on their business, right? How it's performing, kind of giving them a look at their business through our lens, is how I like to kind of explain it. Is the way we would underwrite or perform due diligence on the business. We share some of that analytics with our clients, so they kind of get a sense of how they're performing, right? And what are some areas of their business that can be optimized, and we tie that in with different resources that they could leverage in order to make those improvements and adjustments on their business. So the Seller Signals, which is a free tool for all of our clients, allows them to get a evaluation of their business and generate a variety of reports and insights in order to optimize their business as well.
Yeah, so I absolutely encourage our audience, and we'll put the links in the show notes. Seller Signals, that's what I was trying to remember, really was intriguing to me versus some of these other platforms where you don't get that. And I love the way you phrased it, transactional versus advice-driven collaborative process that you guys offer, unique, more of a relationship, right? Really don't look at us as just, hey, we're here as a bank. We really are here to be kind of your partner, very similar to how VENDO positions himself. I know a lot of our sellers, at least on the Amazon side, are always hit with Amazon lending offers. As a seller in the past, I know we've dabbled in those. I'm curious what your perspective on Amazon lending is. And just before you talk there was a little static or feedback on the headphones there, just in case. I don't know if there was something that was moving.
Oh, sorry about that.
Yeah, that's better. That's perfect. You're good.
Okay.
Keep going.
I'll try to be as still as possible. Awesome.
You're good.
Amazon lending for sure. I'd say even more so than some of the other competitors that you had mentioned earlier. They're probably the ones that we run into the most. But I look at us as being complementary to Amazon, if I'm being honest, right? Obviously, they provide their lending service in partnership with Marcus, right? Run by Goldman Sachs. So their cost of capital is a lot lower than ours is, right? So we'll just kind of tell it how it is. So they are able to offer very competitive rates, right? Which we're not too far off from, but it's going to be hard to be kind of, on average, let's say, right? But I think where we differentiate ourselves is I think the audience probably knows very well already, is the way that Amazon lending works, right? Where it's kind of take it or leave it, right? It's by offer only. And there's no flexibility around it, right? So you're offered X, these are the terms, take it or leave it, right? And that's not how we operate. So I think that's how we differentiate the most. And then obviously your entire life is already owned by Amazon. So maybe this is just kind of a way, to one way for you to, distance or diversify yourself away from it, right? Because a lot of folks, and that's the other part of it too, why we end up having to be a little more expensive, is because Amazon owns your receivables at the end of the day, right? So if you don't pay, if you don't perform, you're not getting those disbursements, right? So kind of they own you, so to speak, in that regard, right? So this is where we operate differently, obviously. So,
no, that's for sure. Yeah, it's the partnership.
We're a complement. Exactly. Yeah. And I'd say that, there's, I don't know what the number is, but I mean, obviously there's a handful of our clients that have both, right? So Amazon offered me X, and then SellersFunding just topped me up to, whatever I needed. So yeah.
But like you said, it could be
alongside them.
Yeah, it could be a supplement, complement to it, et cetera. Absolutely. Exactly right. I think in that same vein, then, to differentiate, because terms are one thing that Amazon offers you, et cetera, and it's hard to compete. Yep. I mean, shippers could argue it's hard to compete with Amazon shipping rates, right? So
that's exactly right. Yeah.
Same thing at scale. But can you talk about maybe an example where you guys helped a seller or made a difference with a client or provided growth? Just really the benefits of that partnership.
Yeah. One specific client that comes to mind. I mean, all our clients at the end of the day, the way that we position ourselves is, like I had said earlier, as a growth partner, right? The focus is to help our clients scale their business successfully, right? And optimize their business, because no one wins if we're putting our customers in a bind, right? It disrupts their business, disrupts their cash flow, and we don't get our money back. So that's not our intention here. We're not in the business of
very opposite to Amazon, where it's automatically
exactly
disrupting your cash flow business because you can't get a hold of seller support. Hey, stop deducting, stop doing this. It's happening.
So. Exactly. So we're trying to put our clients in the best position to succeed. But one specific example is actually a kind of unique case where it was a predominantly brick and mortar brand, a global brand that can't name, but if I named, I think you know them, Darren. But they right at the start of the pandemic, obviously with everything shutting down, they did a complete 180 and pivoted towards online, right? And this is a business that was doing well above 50 million in annual revenue. And so they did a complete 180, pivoted towards online, but in order to kind of help them through that transition, we were able to offer them a multi-million pound line of credit that they were able to draw at leisure as they needed, right? And not only that, but we were able to give them a long enough runway where there wasn't kind of a target on that back or kind of walls closing in on them, to kind of have this project up and running and be successful, right? So we were able to extend the terms of our traditional agreements, and we were able to give them this kind of revolving facility that gave them a runway. And basically in a matter of about a year or so, they've done a complete 180, and they're kind of exceeding expectations and thriving online, not only via own platform, omni-channel, but we've also helped them on Amazon as well. Just kind of leverage our network, the resources that we have. And they were completely new to Amazon, but we were kind of able to give them, that boost that they needed to be successful on that platform as well.
That's awesome. We haven't talked about other platforms outside. Correct me if I'm wrong, but you guys do fund or help with, whether it's Walmart.com or Shopify or other platforms. Is that right?
We do. That's exactly right. Yep. Yeah. So anything that essentially trades online, we can support. So we do, as of right now, have integrations with most online marketplaces and platforms, at least in the US and UK and continental Europe. But even if it is an own website, let's say, or a platform that we don't have an integration with, we'll just kind of do it the old-fashioned way. We'll roll up our sleeves and we'll kind of look at the numbers, and more likely than not, we'll be able to offer some sort of funding for the business.
A little off topic, and I know we didn't really prepare much for this, but just curious.
Yeah,
it's the hot topic in the Amazon or online space, aggregators.
Yeah.
I know overseas, a lot of people don't realize Berlin Brands is actually number 2. Everyone likes to talk about Thrasio and Perch and eBay, but people keep forgetting about Berlin. They're right there.
There's some heavy hitters over here too.
Yeah, I'm sure, exactly, and that's why I bring them up. I was curious, has your company had any interaction with any of the aggregators?
We have a good relationship with most of these guys, actually, because again, I think we complement each other, right? So in what we do, and then the interesting thing, I think, and we were just talking to one of the aggregators about this not too long ago, is kind of the data that we're seeing in terms of the funding that we're offering businesses. That aggregator sweet spot, it has kind of dried up for us a little bit in terms of funding. So businesses that are doing an annual revenue anywhere between call it 2 million to 10 million or so. I think a lot of those businesses, because of the emergence of this aggregator kind of spree, has kind of affected the lending side of things there. But what we're seeing as a result is anything below that threshold or above, there's been a significant spike. Businesses just kind of focus it on the lower end to scale up their businesses, right? To get in a position to be able to potentially be acquired or exit. And then again, larger business, just kind of, business as usual, continuing to, just utilize working capital to support their business.
Yeah, it's a fascinating time to be able to start anything you want and grow it, scale it, sell it, without leaving your bedroom. Basically,
it's incredible. It really is. Yeah. I love it.
Well, I know we had some other questions and things slated here, but I'll kind of bring us to a close a little bit, and would love to give you a chance if there's any other thoughts or comments or insights. We didn't really get to touch on some of the other international marketplaces like Mercado Libre or Pinduo, et cetera. But anything else you want to offer up to the audience, any insights or even actionable tips, if you have any, I think that would be great.
Yeah, no, I was just briefly actually going to touch on that. I do think that, we are living in the golden age of e-commerce. And I think we're still very much in the early innings of it, right? And so not only on Amazon, but as you had touched on, I think just marketplaces and e-commerce globally too presents such a huge opportunity for sellers. So I think one interesting, I was going to mention earlier, one interesting piece of resource, again, most folks may already be familiar with it, but TameBay puts out an annual report of the fastest growing marketplaces. So I think that's an interesting resource for people to just have a look at and just keep an eye on. So some of the more common marketplaces in Europe being Bol.com in the Netherlands, Allegro in Poland, and then you have niche marketplaces, right, like G2A for gaming or Mano for DIY and gardening. And then just looking at Latin America as well, right? So I know that that's a little bit more opaque or just a less frequented or explored market, but there's so much opportunity there, right?
Oh, yeah.
So you're talking about some of the largest economies in the world, and some of the fastest growing e-commerce markets globally as well. So I think actually Argentina leads that ranking. Argentina is the fastest growing e-commerce market in the world. Brazil's not too far from that. So I think there's a lot of opportunities to be had, and there are a lot of service providers and businesses that are popping up to support sellers in kind of going international cross-border, especially as it relates to some of these more emerging markets, let's say. So yeah, no, thank you for your time. Really appreciate it. Want to wish everyone listening here the best of luck in their business. I think the time is now. I mean, there's so much opportunity ahead of us. It's funny. I know we talked to some folks that have been in the space a little longer, and they say, look back, 2017 was the year, or people, in 2020 will say, so-and-so was the year. But I think we're going to be looking back on, 2021, 2022, a couple of years from now and saying, that was also the time. So I think we're not too late. There's still so much opportunity ahead of us. So super excited.
You're so right. It's the constant saturated question that's out there.
Exactly.
Is it saturated to start on Amazon, or should I start an FBA business? Should I sell on Walmart.com? Is it the right? So yes, you couldn't be more right that now is a great time, and I don't think it's going to slow down anytime soon, quite frankly, especially when you think about the fact that still 85% of retail is still offline. It's still bricks and mortar. Right. So e-commerce, at least in the States, that's the statistic in the States, is only 15 to 20% of all retail. So we haven't even scratched the surface, quite frankly.
That's crazy. Yeah. And that's with a report I saw just the other day that BCG put out, that $5 trillion in annual sales shifted from offline to online in the past year. And again, that still represents, a minority of overall retail sales. So there's still a huge opportunity in front of us.
Yeah, well, and then the latest Walmart earnings indicated what, I don't want to say post-pandemic because we're still very much in it at the time of this recording anyway. And it showed a shift where actually their online sales were showing such growth. And then now recently after vaccinations, et cetera, people were starting to go back to stores. So offline sales started growing again faster than online sales for the first time in a while. So that was interesting to see kind of the consumer behavior is kind of in a pendulum a little bit, depending on what the conditions across the world, for that matter, are health-wise.
Yeah, no, absolutely. But even with that, I think e-commerce isn't going anywhere. As we all know. For sure. And another, just very quick, and I can share this with you, Darren, but an interesting chart that I saw by McKinsey kind of showing the distribution between marketplace specifically versus proprietary platform, right? So own website, let's say. And so back in 2017, that breakdown was actually 25% marketplace versus 75% own website. And the forecast, it's now about 50-50. And by 2023, the expectation that it's going to be 60% marketplace and about 40%. So it's going to invert. So I think we're in the right place talking about marketplaces.
Well, by the way, no surprise, Amazon led the way in that trend in the sense that 2017, 16, it was 60-40 or 70-30, 1P versus 3P, own versus marketplace. It is now flipped. And as of today, 60-40, something like that, 70-30 is marketplace. So not surprised by the overall marketplace versus own direction that you're describing, given that Amazon represents a large share of that e-commerce space. Leonardo, tell everybody, how can they get a hold of you, find out more about seller funding?
Yeah, absolutely. So me personally, very easy, Leonardo at SellersFunding.com. Feel free to reach out to me, send me an email. Looking forward to it. Would love to speak with you. If you want to learn a little bit more about us, just go to SellersFunding.com and have all the information there. But yeah, feel free to reach out. Would love to speak with you.
Awesome. Thank you so much for joining us. I know it's late your time, so even more so.
It's a pleasure.
I really appreciate it. And then as always, to the rest of our audience, remember, protect your brand, sell more. Thank you for joining us.
Thanks, guys.